Hey everyone, welcome back to the channel, your number one source for income-oriented investing. Time to go over the high-yield covered call ETF landscape on the Canadian stock market. US market episode is coming up soon. As usual, let's go see what the market has done in the last month. So let's start with the S&P 500, of course, up 2.49%, really good month. Nasdaq a little bit less than that. 1.53 though. The Canadian stock market up 4.5%, really being held by gold producers and of course the Canadian banks. As usual, right? Same story, different year. Gold is up significantly as well, up 8.69%. This is the GLD, the Spider Gold Trust ETF, and Bitcoin down a little bit. It's up today. By the way, I'm filming this on September the 10th. It's down 3.6%, so a little bit undervalued there. Let's go over the high yield landscape, but before we do that, I'd like to thank the sponsor of this monthly series, great friend of the channel, Harvest ETFs. In case you didn't know, they launched their new line of Canadian single stock ETFs. A bunch of them here like Shopify, Royal Bank TD, really the titans on the Canadian stock market, and the very popular all-in-one type ETF, which already has 43 million AUM. So if you just want all of them all together, one ETF solution, HHIC, which is basically, think of it like the Canadian version of the very beloved HHIS. You could just pick up some HHIC. The first distribution declared at 16 cents a month, which roughly translates into approximately 16% yield. The yield's a little bit lower than that because the price is going up, has done well. So yeah, check it out. Make sure to check out if you want to invest in the single stocks, if you like a particular stock, or if you just want all 10 of them together, you have HHIC. Some other news, big news coming out of Harvest, everyone, is that they are launching 5 new Harvest high income shares on the US side. So you're going to have Circle, JP Morgan, Reddit, Robinhood, and SoFi. So more are coming on the US side here to complement, of course, their giant line of US ones, which right now they have 15. Right, we have the list here, and of course, all 15 right now are in HHIS. And by the way, look at HHIS's AUM. It's absolutely incredible. This thing is going to hit $1 billion very, very soon. Obviously, very, very, very popular. So yeah, I'm excited about these 5. I think what they're probably going to do is maybe replace some lower yielding ones in HHIS with these higher yielding ones. Some of these higher yielding ones. I'm not sure exactly what they're going to do, what they're going to swap, but we'll find out soon. I'm sure once the 5 come out. And I have a strong suspicion maybe the yield is going to increase. Maybe the distributions are going to increase on HHIS slightly if they're going to add these new ones in here. So we'll see what happens. It's obviously very, very exciting here. So looking forward to it. Always great stuff coming out of Harvest. They're obviously hit it out of the park with these high income shares. Very, very popular. So yeah, HHIS, remaining steady, by the way, at 25 cents a month distribution rate. So you're looking at, about 24% yield right now based on, the approximate price of about $13 a share now. So moving on, let's go over now. We covered the Harvest high income shares, HHIS, HHIC. Definitely qualify as long-term buy and hold core positions in an income portfolio, in my opinion, because they have high yield, they have diversification, they have covered calls, they have some leverage, and they have great, fantastic management. But of course, there's much, much more. I recently came out with a video called The Great 16, and obviously HHIS and HHIC are part of it. But let's go through the rest of them. So you have HDIF, which is Harvest Classic all-in-one cover call solution. The non-leverage version is HRIF, but HDIF here is basically a collection of the covered call ETFs, which are mostly sector specific, that Harvest has. No changes on this one, no distribution changes. They also have HBIE, similar concept, but it's a 60-40 split, 60 stocks, 40% bonds if you're interested in that. No distribution changes as well. Moving on to Hamilton ETFs, of course, they have the HYLD or HYILD and HDIV. They're classic all-in-ones. No news on these ones. They're also growing very rapidly. I think HYLD is going to hit $1 billion very, very soon. So yeah, distribution remains steady at near the 14.5 cent mark. They recently increased it to 14.7. HDIV as well recently at a little distribution bump, and both of these ETFs are just performing very, very well compared to their benchmarks. The VSP, I guess, with HYLD and HDIV, they did rename it to the Canadian Covered Call ETF. No changes in terms of strategy. It is definitely more weighted towards the Canadian stocks, Canadian companies. And I'm not sure if they're going to add C-Day and HDIV and S-Day, their new Daymax ETFs, into HYLD. Personally, I think it's a good idea. I think C-Day should be part of HDIV and S-Day be part of HYLD. That would be my vote. I think they could reduce S-Max a little bit, maybe Q-Max a little bit, to make a 10 to 15% holding for S-Day. That would be my preference. I hold HYLD and S-Day, but I think S-Day deserves to be an HYLD. I think it makes complete sense. I have a little bit of that zero DTE in there. What do you guys think? Let me know in the comment section below. Do you think S-Day should be added a little bit into HYLD and C-Day maybe in HDIV? And don't forget that C-Day and S-Day are really blue chip, boring Canadian dividend stocks and US dividend stocks for S-Day, with covered calls. And that's where the income comes from, the zero DTE calls on the VOO, on the S&P 500. So S-Day, C-Day, and even Q-Day pretty much have only covered calls on 20% of the portfolio. In case you want to learn more about that, make sure to check out the Q&A on the Daymax ETFs with Nick Picard, the guy who actually manages these strategies. Q-Day is technology focused, so it holds XLK. So you have 100% exposure to XLK, or 80% if you will, and then the rest 20% in QQQM, and that's where they're writing the cover calls on. Q-Day is by far the most popular one out of the Daymax. It has the highest yield. And by the way, they declared distribution increases for all three of them, by the way, slightly increased. Remember, you got to expect some fluctuation here. Moving on to Global X, which I feel are the kings of the indexes, right? They got all the indexes and every style you could ever want. So of course, my personal opinion, the S&P and the NASDAQ are definitely going to be part of the Great 16. So USCL is the S&P 500. No distribution changes, solid 24.5 cents. You're always going to expect between 12.5, 13.5% yield, in my opinion. I really like the fact, by the way, that they added the option coverage and the moneyness, so you could see basically exactly what they're doing, how much they're covering. QQCL, the NASDAQ 100, same thing. You could see the coverage here. They typically cover up to 50%, and it's very, very slightly out of the money. So very solid 14.5% yield here. The XEQT in the covered call world is EQCL. EQCL is a combination of a bunch of indexes with the cover calls and 25% leverage. You could see that here. So it kind of basically holds, USCL here and QQCL. They got a bit of Russell. Of course, you got the TSX 60, et cetera, et cetera, et cetera. So this is really, if you are an income investor, you really like that XEQT, ZEQT, VEQT style of ETF. You absolutely want the whole world, which I'm not a fan of personally. I'd rather just have US primarily and North America primarily. But if you absolutely want the whole world, you're an income investor, you like that style, EQCL is definitely for you, and you'll definitely get a nice yield of just under 12% yield right now. Moving on to Brompton, they have the very popular BMAX. This is their all-in-one, which I believe they raised the distribution again to 12 cents. So BMAX is, Brompton I consider a very, very good, solid manager. If you're looking for reliability, Harvest is great, Brompton is great. They're all great, to be honest with you, but Brompton really takes a more moderate approach when it comes to the covered calls. This is also one of the only ones, not the only one now, that uses 33% leverage, but this all-in-one, make sure you understand, it does have some fixed income in here, right? It does have some fixed income. So 140 million AUM. It's growing steadily. You see what there is in here, right? You have some preferred shares and the split SPLT to give you a little bit of that fixed income exposure, if you will. But yeah, increase of distribution, I'm not surprised, because it's hovering at the 10% yield mark, and the stock price, and the NAV is growing as well. So of course they'll be able to increase the distribution. Class A, the all-in-one, the genius idea that they came up with, the all-in-one Class A split fund, right? This is basically what SPLT does, but on the Class A shares. This is a great way or a great thing to maybe swap your individual split funds into if you're really not liking or the possibility of possibly missing distributions. They come out with this ETF that basically combines all the big and major split share funds in Canada, right? And they typically give more of the percentage to the bigger funds. Like DFN is still the biggest split fund, so you have the biggest percentage. LBS, FTN, FFN, SBC, ENS. I'm just playing a game here to see if I memorize the stock symbols. This is LCS. This is GDV. This is BK. This is Dividend Growth Split. This is DGS, right? DFN2, and this is the one from Middlefield, I believe. So yeah, this is an all-in-one. Sorry, I kind of just went off on a tangent there, but all-in-one split fund solution, and the performance has actually been really, really well. I think it's like performance has destroyed everybody recently as well. So definitely want to consider, very well diversified, and I trust Brompton with my life when it comes to distribution management, cover call management. They're really a total return firm. 9 Point is also in the game now to compete with Purpose and with Harvest. They launched the Canadian enhanced Canadian high shares. They have an all-in-one, so ECHI is their all-in-one. Zero management fee until next year, and then it's going to go to 29. Also has 25% leverage, so very, very, very similar cover call strategy and holdings to HHIC. And Purpose also launched, they have their own yield share suites, which has a lot of US ones, but they added a bunch of Canadian ones as well. So Purpose, the yield is typically a little bit lower. They write a little bit less covered calls, so you might see a little bit lower yield, but very, fairly consistent distributions. There's still the 25% leverage on all of these. So if you like to invest in the Canadian stocks like Enbridge and Scotiabank and Royal Bank and TD Bank, etc., you could always choose either Purpose, Harvest, or 9 Point single shares. To give you a little bit more yield because there's leverage and those covered calls. But unfortunately, Purpose did not come out with an all-in-one for the Canadian one, their Canadian ones, which they came out with more companies. They have Couche-Tard, they have Dollarama, they have Brookfield, so they have a lot of names that Harvest and 9 Point did not come out with, but no all-in-one, unfortunately. I'm not sure why. They have a bunch of US ones as well. The only all-in-one one that they have is YMAG, which is basically the Magnificent 7 plus Broadcom. So the Magnificent 8, if you will. This is kind of their only all-in-one, but it's more like a tech one, a tech-focused one. And finally today, the day I'm filming this, Biggie comes out from Evolve. So this is the first out of the two. They're going to come out with a Canadian one as well, a Canadian Ultra Yield series that's going to focus obviously on Canadian stocks. So this is the Evolve US Equity Ultra Yield ETF. What makes this different is that, first of all, they're using 33% leverage. So like BMAX, this is the second one after BMAX that's using 33% leverage instead of 25. So 2 distributions a month, semi-monthly distributions. So 31, the first distribution has been estimated to be 31.25 cents, which basically entails a $7.50 annual, right? You got to do, if you do this times 24, you get the annual. So because they started at $25, I believe the yield is about 30%. So the yield's actually starting at about 30% on a $25 price. Yeah, just did the math there. So if you do 0.3125 times 24 divided by 25, you get 30%. So hey, 30% starting yield, it makes sense because there's a little bit more leverage than HHIS. If we look at the stocks, there's only 10 stocks. I wish there would have been a little bit more than that, but it's very simple what they did. They took the Magnificent 7 plus Strategy, Palantir, and Coinbase. That's basically it. So typically, Evolve likes to follow indexes, and I believe they probably made their own index for this one. I don't see the information here, but I can't wait to talk to them and ask them about the stock selection, if they could put more in here, if they could swap some out, if they're going to go to 15 or 20, 25 stocks. But it looks like, and I also want to ask them about the covered call strategy. So I believe they're able to go 100% coverage if they need to, which I'm not a fan of. I don't like when fund managers go more than 50%. So hopefully we'll have a Q&A soon with Raj or someone from Evolve. I know that I am actually meeting with them in person in Canada in the next week or two. So I'll definitely give you some more information when the time comes on this one. Expect Q&A soon, hopefully, right? If you guys want a Q&A, let me know in the comment section below. All right, moving on to the very boring, I say boring, but they could be really good, non-leveraged top covered call ETFs, in my personal opinion. Then we're going to do the Bitcoin ones as well. So you have ZWQT. BMO still big in the game. They have a bunch of them. This is their all-in-one. No leverage versions yet. The yield is under 6%, so obviously it's quite boring, but very reliable manager, if you will. They did come out with a new gold spread cover call ETF, which I think is a really good idea. I have a video coming out on that soon, and I talked to the portfolio manager of that ETF, so stay tuned for that. But ZWQT and BMO has a bunch of other cover call ETFs, which I suggest you check out. My personal favorite, if you ask me, is always the ZWG one, the global. The returns have been really good on that one, but you know me, guys, I prefer leverage versions. Evolve has a S&P 500 and TSX60 covered call ETF. Performance has been really good. If you do the performance versus the benchmark, so ESPX versus VSP, I say VSP because ESPX is hedged the Canadian dollar. They do have an unhedged. So if you do ESPX.B versus VFV, you'll see that performance is really good without the leverage. Personally, I'm going to say it here. I think Evolve is absolutely nuts not to have 25% leverage versions of this one and this one. That's just my opinion. TSX60, right, overall Canada, if you will. Very nice high yield, by the way, in the nines for both of them, I believe. Yeah. You got JEPI and JEPQ on the Canadian side, everyone. So if you really like JEPI and JEPQ, you could get them in Canada now. The same stock symbols. Personally, I'd rather get the indexes. I'd rather get the S&P and the NASDAQ itself. But you're going to expect the same yield for JEPI and JEPQ just like in the US. About 7 for JEPI and about maybe a little bit higher for JEPQ, looking at 9, right? So if you look at the latest distributions here, pretty steady, pretty boring, 22 cents, which translates probably into a yield of, let's just do it here. 22 cents times 12 divided by 26.50. Yeah, you're looking at the 9 to 11% yield range typically for JEPQ and the 7 to 9 for JEPI. Fidelity has a FEPI. This is S&P 5. This is a rinse and repeat passive cover call strategy where they're doing 2% out of the money on the S&P 500. So I think this one's, I haven't really checked the performance. Let me just check here. So FEPI has not been out for a year, I guess, but if I just do the returns year to date versus the Evolve one, the SPX.B, I don't think FEPI is hedged the Canadian dollar, right? I hope not. But if it is, my mistake, you'll have to do it versus ESPX simply. But you could see that, not surprising, the Evolve one is absolutely destroying the FEPI one. It's just, this is typically what happens, guys, when you do a rinse and repeat strategy. They just simply don't work that well on cover call solutions. Invesco has QQCI. QQCI is basically the NASDAQ 100 with covered calls by the guys who actually manage the Qs. But I would always go with, I would always go with QQCL. That's the one I own. But if you do QQCI versus QQCC, the non-leveraged one, you see that the Global X is still outperforming it. So, which is strange to me because it has, I think, a higher fee, and these guys are supposed to be the NASDAQ experts. So maybe they should stick with the indexes and not the covered calls. I'm surprised that it has already 46 million in AUM when QQCC is obviously performing much better. But anyway, PDIV is the last one. I think HDIV is superior, right? If you want in North America, PDIV does calls and puts, and they have Canada and the US, so I think HDIV is a better alternative. But it's still going strong, and the yield hasn't, it's pretty high, surprisingly high. Moving on to Bitcoin, of course, we got plenty of Bitcoin options now. We have HBIX and BCCL. If you want just IBIT, just Bitcoin with covered calls and 25% leverage, HBIX has a monthly distribution. BCCL has 2 distributions a month if you're into that. HBTE, which has been on fire lately, is Bitcoin companies. If you're scared of Bitcoin, I think this is a great way to get started because it has Bitcoin related companies. It also has a little bit of Bitcoin in there as well. So you have like crypto miners that are on fire like IREN, but you have Coinbase and Strategy, Marathon, Galaxy, a little bit of Bitcoin itself. So this could be a good way to get into Bitcoin, kind of like indirectly if you're an income investor. And by the way, all 3 of these have covered calls and 25% leverage. Of course, there's still BTCY from Purpose without the leverage and the higher fee, but I would always go with the leverage version. That's just me. Split share funds still trading at massive discounts, some of them, especially the Canadian financials, which have been on a tear. So, now the easy solution is just going with the Class A. But if you want to hunt discounted split share funds, you're having a field day today. I would especially look at the Canadian financials like SBC and LBS. I mean, look at these discounts, even LCS, but LCS is just the life insurance companies. I mean, you could buy for, this is a little old data here, September 4th, but hey, you buy for 10.15, but it's worth 11.59. You buy for 12.15, and it's worth 13.55. I mean, these are double-digit discounts. It's pretty crazy, guys. In the middle field, split fund world, ENS, the Enbridge one, is at a massive discount as well. Right, it's worth 17.49, but you could pick some up for 15.25. Even the REIT one is at a discount now, a tiny discount. The infrastructure one as well. So yeah, lots of discounts in the split share funds. I wouldn't ignore them. In fact, I recently added split funds, or one split fund back in my portfolio. You'll find out which one it is soon in the next portfolio unveil. Of course, if you're an Inner Circle member, you already know, because I already told the Inner Circle members what I bought for September this month. If you're interested in that, by the way, click on the little join button. Make sure you're an Inner Circle member. So in terms of what's undervalued, I think healthcare is still kind of undervalued in terms of sector. So you could check out HHL and HHLE from Harvest, but the market's on fire pretty much. I think it's going to continue to be that way. I think the Fed is probably going to cut interest rates this month, which should make everything go up. Gold's on fire, Bitcoin's up, everything is up because the fiat currency and the dollars are all worthless, right? So of course assets are going to go up, guys. It's only normal. So best thing is to stay in the market, keep buying more, stay in the market forever, and you'll never lose money, especially with this system, right? Because we're just getting paid every month, so we don't have to sell anything. It's absolutely magnificent, right? So that's it, everyone. Tell me what your thoughts on Biggie are. Are you going to pick some up? Are you interested in having the Q&A, having Rash talk about everything that's going on with Biggie? Make sure to check it out as well. Make sure to check out Harvest as well. Always coming up with new things, new single stock coming. On the US side, it's going to be very interesting. I'm very curious to see which ones are going to put in HHIS. I know they're going to put some of them, but I just don't know which ones. It's going to be very interesting, and hopefully they'll be able to raise the distribution. So hit a thumbs up. Give me a thumbs up. I would really appreciate it. We're going to do this again next month because I'm always here to keep you informed of the covered call ETF landscape in Canada. Don't forget to check out the video description where you have links to digital products, one-on-one coaching sessions, etc., etc. And if you're in Montreal or Toronto, get your Blossom tickets. There's still tickets available. I'm going to be there in person. Harvest is going to be there. You're going to meet the guys from Harvest as well. Michael Kovacs is going to be there. Don't miss it, guys. If you're in Montreal and Toronto, come to the event. It's going to be a blast. Buy your tickets. Use Adriano15 as the promo code to get a 15% discount. Take care, everyone. See you next time.